Good afternoon, ladies and gentlemen, and welcome to the Q4 FY23 earnings call of Pondy, Oxides and Chemicals Limited, hosted by AlphaStreet. This is Radhakrishnan Chonat from AlphaStreet, and it's a pleasure to host Pondy, Oxides and Chemicals Limited for their quarterly earnings results conference call. From the management, we have Mr. K. Kumaravel, Director of Finance and Company Secretary, and Mr. Vijay Balkrishnan, the Chief Financial Officer, joining us today. As a reminder, today's call is being recorded. For professional investors, we are live streaming this audio along with the AI-generated transcripts on our alphastreet.com platform. A replay audio of this call will be made available on alphastreet.com platform as well as on our AlphaStreet India YouTube channel. A final transcript will be available shortly afterwards on AlphaStreet's platforms as well as at alphastreet.com/India. Now with that, may I now request Mr. K. Kumaravel to take you through the presentation. Post that, we can start with the Q&A session. Over to you, Mr. Kumaravel.
Thank you, Mr. Radhakrishnan. Good afternoon, everyone. We wish you a warm welcome to POCL Q4 FY23 earnings call. We will briefly discuss the financial performance, and I shall give you the update on the overview results and the strategic acquisition mentioned in our last announcement, along with other project updates. Pertaining to the financial results, POCL has delivered a stable result for Q4 of FY2023 with a total revenue of INR 435 crore, a growth of 17% from the previous quarter of Q3 2023, that is INR 372 crore. With respect to volumes, the company has been relatively similar for FY22-23 from the previous year 21-22. This puts the company in a strong position to expand into other non-ferrous metals like aluminium, copper, etc. POCL has recommended a final dividend of 50% this year, and it continues to be a consistent dividend-paying company since the inception. We are also happy to share that substantially for this financial year 22-23 also we have crossed a turnover of 100 million in exports. Further, based on the earlier intimations to stock exchanges, we would like to reiterate that equity shares of the company are listed and traded in the National Stock Exchange capital market segment from 6th March 2023. In relation to ratios, our EBITDA, net profit margin are relatively same as previous year. With respect to the current ratio, we are at the optimum level of 1.6. Our sales composition is 55% export and 45% domestic proportion, and for the procurement we are around 25% domestic and 75% imports proportion. There has been a reasonable growth in EPS by 22% in INR 12.24 to INR 10.01 from the previous quarter. There has been a significant increase in the cost of smelting, refining, along with the cost of utilities such as power, fuel, which has further added to the overall cost of production. Despite increase in the overheads, there is increase in the gross margin levels to 12% compared to the previous year. Further, in continuation to our discussion from previous earnings call, post-acquisition of the company of Harsha Engineering Private Limited, the management is working on viable business opportunities in both short term and long term, which will yield in positive strategic growth in correlation with our existing portfolio. Necessary updates on the same shall be duly intimated in due course. We appreciate you all participating in today's call. As you are all aware, given the company's track record and forward-looking perspective, we have a clear roadmap for the future as we optimize the current operations and build ahead with the new endeavors and more verticals. We will use this as a solid foundation to increase our global reach. Over to Mr. Radhakrishnan.
Thank you, Mr. Kumaravel. We'll now move into our question and answer session. Today, as you all know, we have participants joining via the Zoom platform as well as via our telecalling platform. Participants who have joined us and connected with us through the Zoom platform can also pose their questions directly to me on the chat box, and we will ask the questions on your behalf. If you wish to ask a question directly, please do use the raise hand functionality. I'll take the first few questions as usual from the chat box, as well as questions we have received via email and through our AlphaStreet platform first, and then we'll open it up for participants to ask questions directly. Once again, please use the raise hand functionality if you would want to ask a question directly to the POCL management. I'll start with the questions that we have received via email as well as chat boxes first, and then we'll let you ask questions directly, if any. The first question. Recently, Germany has officially entered into recession, and other developed economies are also bound to follow the same. What effect will the global recession have on your company's performance?
Kumar will give this answer to this question. We feel that the Asian economy, specifically India, are going to perform better than their peers in Europe and US. We will see slowdowns in certain economies, but nothing major so that it will affect our company's performance. Since our business affiliation and transaction with Europe is calculated and does not attract risk, since we have multi-sourcing strategy and our customer concentration is spread across the globe.
Thank you, sir. The next question. How do you perceive the current industry landscape, and what do you think are the key trends affecting the industry?
We see the current industry landscape as extremely positive. Recycling is now an integral part of every economy. As per the International Lead Association, at most 75% of the global lead demand is sourced from recycled lead. We feel that aluminium and plastic will also hold an important place when it will come to raw material substitution or technological advancement, in addition to their inherent growth on account of increasing demand. The key trends affecting the industry positively will be increase in recycled raw material percentage in the manufacturing process in line with the global norms. Technological advancement is going to be an important influencer in changing the applications of raw material through either substitution or manufacturing value added or specialized products.
Thank you, sir. What are the company's initiatives for getting better rates for purchases on raw materials?
Hi, Radhakrishnan. This is Vijay. I will take this question. So POCL has more than 270 plus overseas suppliers base, a team with a very good global outreach, multi-sourcing strategy of procurement from more than 90 plus countries. In addition, the domestic base of sourcing has improved from 85% imports to current 75%, with a balance of 25% being sourced domestically, which will only witness to grow further. That is, domestic procurement going forward will grow further. Domestic sourcing will also lead to reduction in cost of logistics as well as shipping.
Thank you, Vijay. The next question is, despite the global cues like recession, how do you intend to keep up with your financials?
Yeah, so in spite of global cues of recession, it is important to note that Asian economies are more resilient than Europe and US peers. Furthermore, India is an emerging market, consumer-driven, and in a strong position to endure any such cue of recession other than its counterparts. POCL, being part of an industry that is non-ferrous, which serves as an integral part of construction industry, along with automobile and engineering, will always be a catalyst for growth and development for the economy.
Thank you, Vijay. We have a few more email questions. The next one is talking about the core business of the company, the lead recycling of the next couple of years. What kind of volume growth are you sort of building into your assumptions for the growth of the business?
I'll take that question, RC. So POCL has a current capacity of about 132,000 metric tons per annum, and we have been consistently utilizing about 60 to 65% year on year. This capacity has been built up over the years to cater to the market demand. We will see an improvement in volumes in this financial year in line with global CAGR of 6 to 7%.
Okay. Thank you, Vijay. And what is your outlook for lead prices in FY23-24?
The pricing in the non-ferrous segment of lead, aluminum and copper is always volatile and sensitive to macroeconomic factors. With the Russia-Ukraine war ongoing and its subsequent impact on the Europe resulting in recession in Germany, we may see temporary corrections, but the global market is now mature enough to withstand the impacts on effect only to the short-term stand. However, we see lead prices in the range of $2,000 to 2,150. There will not be any bullish trend in view of the global cues with respect to Europe and US.
Thank you, KK sir. One additional question. Are there any other verticals where the company is trying to expand in?
Our focus will be on 4 verticals in the current financial year, which we have already gone live. Lead with remains our primary product. Aluminum, which has gone live in Q4. Copper, where we are looking to scale up and add value-added products. Plastics, where we see a lot of potential in recycled plastic segment and the compounding segment. Additionally, we have our internal R&D and projects team who are doing feasibility analysis of e-waste, lithium-ion, rubber, paper, and glass.
Okay, great. A couple of questions from the chat. If there are any repetitions, sir, please ignore. First question is from the line of Darshil Javeri. What kind of revenue growth and operating margins we can expect going forward? What is a sustainable revenue? And what other businesses are we diversifying into? I think the second part was already answered.
Yeah.
So what kind of revenue growth and operating margins we can expect going forward? And what is a sustainable revenue? Kind of a forward-looking question.
Revenue growth, we are expecting additional 10% in the current financial year. Taking into account this volatility in metal prices, though in terms of volume, we may do more, but in terms of value, it is not quantifiable. But we do almost 10% growth in the total turnover. And in terms of profitability, when the same 6% EBITDA will be maintained in lead segment, and aluminum and copper, depending upon that contribution from that unit, EBITDA percentage will vary, and that will further give the additional growth in EBITDA margin.
Okay, sir. The next is from Bhavesh Chauhan. Do we continue to target rupees 200 crore sales from plastic in FY24? And what is the overall volume growth that we target over the coming years? And why our volume growth remains stagnant in FY23?
And for volume growth stagnation, I give answer. For plastic, my counterpart, Mr. He will give answer to that. As I told earlier, in terms of volume, we have grown over to the previous year in 22-23 itself. But in terms of value, it is flat. Reason being that the LME prices average has come down compared to the 21-22. That is one reason. And the other new products like aluminum and other things just came live only in the 4th quarter of 23. So if we additional whole year contribution, if you take in the next financial year, as I informed, the growth will be reflected in the next financial year. Now Piyush will give answer for that plastic segment.
Good afternoon, everyone. My name is Piyush Dhawan. I'm President for Commercial and Strategy. So I'll answer the question on plastics, which is raised by RC. Regarding the contribution of quantity, we've started phase 1 with a total capacity of 1,000 metric tons per month. And this year, we should end up, this financial year in question, we should end up with a turnover of close to 60 crores as contribution from the plastic division. In terms of capacity, the revenue which translates is about 96 crores. And once we go to phase 2, which is more into compounding, in phase 2 and phase 3, we have a target to achieve about 3,000 tons a month in the next 3 to 4 years. So which should translate to a turnover of roughly 300 odd crores from the plastics division.
Thank you, Piyush and KK. And the next question is from Aman Vishwakarma. He has asked 4 questions, so I'll break it down. The first 2 questions were, what are the revenue and EBITDA guidance for FY24, as well as what's your capex for FY24?
Asi, I'll take that question. So as Mr. Kumaravel said, the revenue, we cannot give absolute numbers, but in terms of percentages, we can project approximately 10% increase in revenue for the financial year 2024. And with respect to operating margins also, we are seeing in the lead segment, it will be more or less the same, but in aluminum and in plastic division, we can see a slight increase of 2% in our operating margins. In terms of this year, with respect to POCL, we are projecting a capex of about 10 to 15 crores this year.
Thank you, Vijay. Aman has 2 more follow-up questions, so I'll try to put that into one question. Capacity utilization is at 60 to 70%. So what is the optimal capacity utilization, and when can we reach it? And the second part of the question is, you have guided good growth and margins, but according to industry reports that he has read, top players like Amara Raja Batteries, they have received only 26% of batteries they sell. So what is the strategy to grow the revenues when most of the revenues is eaten up by unorganized players?
But capacity utilization in Tamil Nadu unit is almost 100%. But in Andhra Pradesh, due to the merger of Malay Metals with Pondy Oxides unit, that capacity has increased, become double almost from 44 to 84 now. Because of that only the overall capacity utilization, it comes around 65%. Now, we want to increase the capacity utilization from 65% to 70% or 75% max. Beyond that, then we have to look into it for the additional. If we stretch the additional capacity utilization, probably maybe turnover will achieve that. EBITDA margin probably will come down. Because of that only we are not increasing the capacity utilization. Otherwise, we will look for 75% utilization in the current financial year, subject to the availability of raw materials in the metal scrap.
Thank you, Mr. Kumaravel. As a reminder, if anyone wants to ask a question directly, you can use the raise hand functionality. I have a few more questions received via chat. This question is from Darshil. Okay, Darshil, I already answered. The next question is from Devesh Srimali. What's our growth and margin guidance for lead and non-lead segments in FY24?
This is contribute out of the total turnover, 90% of the turnover from the lead segment only. That 10% is from the aluminum, copper and the plastics for the current financial year at least. So the 90% of the turnover will give a EBITDA margin of 6%, and that 10% contribution will slightly give more EBITDA margin of 8%.
Got it, sir. Let's jump into, I think we have one person who wants to ask a question directly. Mr. Muthukumar, please unmute yourself and you can ask the question directly. Please identify your full name and company affiliation also. Thanks. Operator, can you please unmute? Yeah, Mr. Muthukumar, go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. I just want to know whether what is this EV R&D stage? I just want you have done for lithium-ion batteries. I just want to know about that. That's the thing, sir. That's only.
So Mr. Muthukumar, with regard to your lithium-ion batteries, it is right now the industry is at a very nascent stage. It will take time to kind of mature in the coming maybe a couple of years of R&D will be required, and plus the automobile segment, which will give us the lithium-ion batteries, will probably start giving the inputs in the next 5 or 6 years. So right now it's at a very nascent stage, and commenting on it won't probably be reasonable. However, with regard to the R&D, what we have done, I mean, what POCL has done right now is that we've kind of evaluated our options and will be ready to kind of cater to the supply and demand when it comes to the appropriate time period.
Okay, so okay, thank you.
Thank you, Mr. Muthukumar. Ladies and gentlemen, I'm going to give a few seconds to see if there are any more questions on the line. Again, if you have any questions, either use the raise hand functionality to ask the question directly, or do send us your questions via the chat box. The next question is from the line of Rohit Ohri. Rohit, please go ahead, unmute yourself and ask the question.
Hi, sir. Just one question related to Harsha Exito. And any developments, or have you made any decision as to what you intend to do with this property of 25 acres with a ready shed as well?
Yeah, that legal compliance just to be completed, that you know about that NCLT acquisition and the compliance, legal compliance, just to be completed 1 month back. Now the detailed discussion is going on in the board and committee about the products to be dealt with. Probably in the second quarter of this financial year, we come out with a concrete plan on Harsha Exito.
But will you be working on the LAB batteries, or will you be going for chop and mat manufacturing?
That's what so many proposition discussion is going on within the board, and that still we have not taken any final conclusion on that. But Piyush also wanted to add something on this. Please hear from him also.
Hi, Rohit. So one important thing to realize is that with the acquisition, we would like to first reiterate that we have access to a reasonably sizable land parcel, which is 25 acres, and it also has a ready building close to 160,000 square feet, and a lot of other value propositions, in terms of the effluent treatment, the sewage treatment, and road construction. Now, when it comes to the portfolio which we would like to kind of, compile for the coming years, we should note that we already have lead, aluminium, copper, and plastics, which have more or less gone live, and lead is our primary forte. Status quo, and the glass we have kind of added because of the acquisition. Now, if you realize our investments in aluminium and plastics since the last year, and the kind of contributions which they will start giving in this subject financial year, we've already mentioned that phase 2 of investments and realization of contribution on the turnover, the top line segment will start. So we will like to concentrate on the current portfolio primarily, which is your aluminium and plastics in this subject plant.
In addition to the lead.
In addition to the lead unit. That's correct.
So the plan is to utilize the property, right? You won't be going ahead and selling it off, right?
No. Why should we when we want to sell it?
Yeah. Okay.
I mean, we should understand one fact, that we've got a ready building, and time value of money is extremely critical here. So by paying the amount what we've paid for Harsha Exito, we have almost 7 to 8 months, maybe a year of savings in the construction cost.
Mm-hmm.
So right now, even if we give maybe a month or two to kind of frame the portfolio, we would like to compile there. It's nothing in kind of the larger scheme of things.
Mr. Rohit, actually, since we acquired through the NCLT acquisition, That unit was closed for more than 3 years. So now everything is to be revived. Take from the power or local panchayat approval, and everything is to be revived. And it is in a different shape. Now we have to bring it and everything, we have to legal compliance. My immediate priority is bringing on legal compliance, which almost we have done it. Now only we are concentrating when plant is ready for products, then only we can think we are taken to the board and get the approval.
Okay.
That stage, now only it has reached it now.
Okay. So for you to have commercial production, it will take you another year or so, is it?
No, it will not take another year.
See, we've already saved 1 year in terms of construction cost. So probably only the ordering of machinery and commissioning it is what we require. So maybe 2 to 3 quarters would be required to kind of go live with the product portfolio which we intend to.
And what sort of capex will be required for this, for the machine additions and the maintenance and other things?
So probably around 10 crore is required to bring it on live as per the present discussion. That is to be discussed in full to bring the exact numbers.
Okay. And would you like to share any developments in terms of the green lead that we were working for?
Okay. So green lead has gone live in terms of the entire commissioning, and we are doing trials as of now. And we continue to do. It's a new technology. We have to understand and ensure that the commercial production which we realize is concrete, is futuristic, and will give us the required output for the years to come. So right now it's more at a trial stage, and maybe in the coming couple of months we will go live with commercial production. Now, when it comes to commercial production and with the technology being completely okay, we kind of have the evaluating options to realize the additional premiums because of the fact that it saves the greenhouse gases and because of the green technology involved. So once we are through with the commissioning in terms of the commercial production, we will intimate and we will announce accordingly.
Approximately by when? Like the second half or early first half, or by when do we expect that will start rolling out and the revenue will start hitting?
So I think in the second quarter we'll see some commercial production, but the actual realizations will only come when we start installing further modules. So once we kind of go live with the commercial production, we'll kind of also expand in terms of the installation of modules.
Okay.
It is only a substitution for our smelting. Maybe this will not give additional turnover to the company. Probably here, this is a different technology and give carbon credit and additional
carbon credit. True. Yes, KK. I understand that. Just that the total capex for the year is in the range of, if KK you can share that.
Yeah, capex for the POCL is 15 crore, Mr. Vijay already told, for this financial year. Then apart from that, whatever to be invested in the subsidiary company.
If I break this into growth capex and maintenance capex, that would be?
All are mainly growth capex only.
Okay.
Capex is very minimal.
Okay, sir. Okay, sir. That helps, sir. Thank you. Thanks a lot.
Thank you, Rohit.
Thank you, Rohit. The next question is from the line of Gokul Maheshwari. Gokul, please identify your company and go ahead and ask your question.
Yeah, hi. My name is Gokul. I'm from Origa Capital. So 2 questions. So you mentioned about the fact that you are moving from lead, aluminium, copper, plastics. So whereas the product portfolio is expanding, could you comment on the synergies which you get from the sourcing and the customer side? Are there any sourcing, or these are vertical units which don't talk?
Hi, Gokul. So basically in terms of the product portfolio, if you look at it, we have non-ferrous comprising of lead, copper and aluminium, and then we have plastics, status quo. So if you look at the non-ferrous segment, in terms of sourcing, there is a natural advantage for us when we source the raw material and when we import it in particular, because the non-ferrous suppliers are more or less common. And since POCL holds a great competitive advantage in sourcing lead scrap, aluminium and copper are again a natural inherent advantage for us. Now, if you look at the copper scrap, when it comes to druids or cables, they have got layers of lead, they've got layers of aluminium, and that's also kind of used as a synergy when it comes to giving inputs to the production line of lead and aluminium. So we have advantages. That's a good question when it comes to synergy point of view in terms of the portfolio what we have created.
But will be having synergies also while selling? Is the customer base also similar? It's very different?
No, the customer bases will definitely be different. So if I'm selling lead, I'm selling lead alloys to the more or less to the automobile sector. When I'm selling copper, or maybe when we start selling billets and wires, it will be an entirely different, we'll be catering to an entirely different industry. When we sell aluminium, that's again automobile industry, but then it's more or less on the die-cast segment. When it comes to plastics, we've got again a great range in terms of the granules being utilized as compounds in the automobile segment, in the electronic appliances segment. So we have a wide range of industries now to cater, and the product portfolio couldn't have been better what we have created in the last 1.5 years, in addition to lead and copper.
Just on the plastics front, my understanding initially was that this was primarily for the lead acid battery segment, where they utilize the plastics also for the battery. Is my understanding correct, or is the portfolio beyond that segment also?
No, so your understanding is definitely correct. What happens is when we process, when we break the batteries, I mean, in our battery breaking and separating unit, we get about 6 to 7% of the PP or the polypropylene or the ABS scrap, right? And that we use internally we basically wash it further, and then we extrude it to make pellets or granules. And that we kind of use it for the industrial application. Now, again, recycling these has got multifold advantages and gives us also an option to start compounding, which is where the value addition lies when it comes to treating the engineering and industrial plastics.
Okay. Lastly, maybe I'm repeating, you might have to repeat on this, the plastics business in the division. When does it go online, and when is the expected scale up happening in that business?
So we've kind of started plastics, I would say about a month back, and I mean commercial production about a quarter back basically. And what has happened is we're going to scale up to about 600 to 700 tons a month from June, July. And then because the commissioning of the washing line and the other ancillary machines was also happening. So we'll start scaling up and we'll reach an optimum level of about 700 to 800 tons a month, starting from June to July onwards.
What would be the capacity for this?
So phase 1 is 1,000 metric tons per month, and then we start scaling up to additional incremental values of 1,000 metric tons.
Great, sir. Thank you so much.
Thank you, Gokul. The next question we have from Aman Vishwakarma. Aman, please identify yourself and go ahead and ask your question.
Yeah, thanks for taking my question. So I'm Aman Vishwakarma from Robo Capital. My question is on the battery sourcing side of your business, right? So from what I understand after reading the industry reports, I can see very few, a small percentage of the batteries are returned to the manufacturers. So, a lot of our revenue is being eaten up by the unorganized players. So what is our strategy to grow the revenues when a lot of our revenue is being lost? So, just your thought on that.
First part I give answer, second part Mr. Piyush will give. And now, unorganized sector procurement is restricted since it requires MOEF approval to import these plastic scrap from the foreign countries. Without Ministry of Environment Forest approval, you cannot bring this battery scrap to India. So to that extent, that protection is that unorganized sector can buy the material only indigenous, whatever available they can buy. Beyond that, they cannot buy. And other part, Mr. Piyush also, you will add something.
Hi, Aman. So basically, I mean, there is definitely an issue, and we understand that there's a parallel unorganized recycling space spread across India, specifically when we are talking about the lead acid batteries. And, we've been kind of making representations through Material Recycling Association of India, where Mr. Ashish Bansal is also a director. And also, when we meet the government officials, we have to kind of reiterate the fact that whether it is the battery management handling rules or the environmental impact, so the notifications and various other waste management rules, laws and notifications. There are multiple lead recycling units, with very small capacities. And they have been kind of authorized by the pollution control boards. So we do make representations to kind of have a minimum quantity, maybe a 36,000 or a 50,000, so that, the organized sector kind of gains momentum and also gains, so the kind of capacities we manufacture, about 70,000, 80,000 tons per annum. That kind of gives us the leverage when it comes to investments in the pollution equipments, whether it is the effluent treatment plant and so on. So we've been kind of making representations to the government to kind of curtail the unorganized sector, and that's also the future. The unorganized sector will obviously, over a period of time, tend towards being organized.
And government
you were saying something?
Government also taking steps based on our representation. Now they are giving that MOEF permission not based on the capacity, based on the actual production made by the company in the previous year and the quantity of material exported to the foreign countries. Earlier they used to give permission based on your capacity creation. Now they are not giving permission, they are giving based on your previous year, how much you produced, how much you exported. Based on that, they are giving weightage and giving permission to import. That become a big advantage to the organized player like us. And we are not facing any problem on procurement because of this issue. And we are getting sufficient material for our operation.
Okay, fair enough. So just one last, like a follow-up on this one. So do we see any major change coming in the next 2 to 3 years with regards to the government regulations and, the, suppression of the unorganized players?
Definitely. I mean, to answer that question, the government of India right now is moving towards a lot of being organized. So whether it is the GST issues or it is, getting the licenses. So we see a lot of change happening, positive changes happening, which will definitely help the organized sector in procurement, for sure.
Okay, sure. So that's all. Thank you.
Thank you, Aman. Once again, ladies and gentlemen, if you have any questions, either use the chat functionality or please use raise hand. I just see that Gokul has raised his hand. Gokul, please go ahead with your follow-up question.
Yeah, just a basic question. Internationally, recycled products sell at a premium to the new products, given the consciousness of the environment, etc. How is that situation in India, and do you see that thing happening in the foreseeable future?
Already government of India introduced that battery management handling rules. Now they are that is already in force from September 22 onwards. So they are insisting all the for recycling of or buying back of old batteries by the battery manufacturers. And similarly for recyclers also a lot of regulations are there. to report it on quarterly basis to the Pollution Control Board and the CPCB and other thing. So over the years, it is getting tightened, and they are bringing everything on regulated basis.
So I'll just add on to what sir is saying. In addition, if you look at the manufacturing using recycled materials globally, almost 25 to 30% recycled material is used to kind of manufacture the end product. And the government of India, if you look at India's commitment to reduce the greenhouse gases emissions as per the Paris Climate Accord, or establishing India as a leading player, we have seen rules coming up, and looking at the battery management rules or the waste management rules. We definitely foresee in the next 3 or 5 years that a minimum utilization of 25 to 40% recycled material will be there to manufacture the end products.
And what would be the current usage?
What would be the current application you're saying? So it depends on the product portfolio, I would say. So if you look at a Boeing aircraft back in 2000s, early 2000s, only 3 to 5% recycled material was allowed to be used, vis-a-vis current of about 10 to 15%. So it depends on the application of the product right now. I mean, it depends from product to product.
And just on the follow-up on the plastics business, you mentioned about 1,000 tons is the capacity. And as you scale up, then you may incrementally expand this thing. But given where you are setting up the capacity, how much can you go in terms of the peak capacity over there?
So the place we have set up the current facility, we have a capacity of 1,000 metric ton, and beyond that, at that particular place, we don't see any increase. However, with the acquisitions of land and building that we've made in the last couple of months, I would say we have ready land and building. We just need to install machinery to kind of scale from 1,000 metric tons per month to another 2,000. But then that entirely kind of depends on how the business fundamentals will shape up in the coming months. But phase 2 will be activated for both aluminium and plastics in this subject financial year.
But at 700 tons, what would be the kind of revenues on an annualized basis you can get on the plastics business?
For 700 tons, 1 second, it would be close to 60 crores.
60 crores, and this is...
1 second. At 700 tons, it would be close to 80 to 85 crores. I'm sorry. I mean, This year we are anticipating 60 crores from plastic, but at full capacities, we'll be doing about 80 to 85 crores.
And this would be higher margin than your core business, which I believe you mentioned around 8-9%.
No, so what happens in plastics is we have a multifold strategy. There are 2 fundamentals to operate here. There is a recycling segment and a compounding segment. Recycling segment, we see typically margins between 7 to 9%. And whereas in the compounding segment, which is where we kind of, are going to concentrate in this financial year, we typically see a margin of 10 to 12% in that particular segment.
Okay, so the mix could be anywhere between 8 to 12%.
Yeah.
For plastics, yes. Plastics, yes.
Okay, great. Thank you.
Thank you, Google. We have a follow-up question from Rohit Ori. Rohit, please go ahead. Rohit, please unmute.
I'm audible now?
Yes, go ahead.
Sir, I was asking if any plans of expansion in copper or value-added products in copper segment?
Yeah.
Hi, Rohit. So, yes, we have kind of reiterated that we more or less concentrated on copper by doing clove, cobra, and the berry segment. But in the subject financial year, we would be transitioning to alloying, which is our key forte, if you look at the lead segment. And by alloying, we mean either making billets or the regular ingots. So we see that happening in the subject financial year, but then that kind of entirely depends on how the business fundamentals operate, because we have right now 4 verticals to operate, and lead the primary forte will continue to operate and see the steady growth what we've kind of mentioned in the beginning of the call. And aluminium and plastics is again a lot of concentration is being done to first stabilize and then penetrate the market further. Copper, yes, we'll see some improvement in terms of the margin, in terms of our priorities this year. We've reiterated last year that copper was not was not shaping up to give us the required revenues, but we'll see a definite change this financial year in terms of our copper outputs.
But do we have the capacity for that, whether it is alloying or making billets? Do we have excess capacity, or will you be probably doubling the capacity for going forward with copper business?
Okay, so in terms of the machinery requirement, we have the machineries in place. We only need to add a furnace to kind of evolve into billets or an ingot manufacturing, which will not require much capex.
And this furnace would be like, is it gas fire or is it?
It's an electric. It's an electric induction furnace.
Okay. KK, if at all you'd like to share on the meet that you'll have with the board, and has the board decided or is in discussion of increasing the promoter shareholding from 48.88% to probably 51% or so, maybe in next 1 year or 2 years' time, if anything of this sort has been discussed in the board meetings?
No, not yet, not yet. This present promoter's holding is as it is only. Right now, there is no immediate plan, to my knowledge, to take it further.
No discussion at all from Ashish saying that, oh, that has increased it to 51% or so.
Yeah, that is the long-term this thing plan. That immediate, there is no immediate plan to do that. Probably we'll do it after 1 year, something like that.
Okay. Thank you. Thanks a lot.
Thank you.
Thank you, Rohit. Once again, ladies and gentlemen, do use chat or raise hand functionality. The next question we have from Devesh Srimali. Devesh, please identify your organization and go ahead and ask your question.
Yeah, hi, good afternoon. I'm Devesh from DS Investment. Congratulations for good numbers. Just wanted to get a little more, couple of quarters view, right? So is it fair to say that, we primarily have a 3-engine sort of in terms of segments, right? So one is lead, which is core. Then we have a lot of upcoming, which is going to happen in this year and future years, which is outside lead, right? Plastic, copper, aluminium. And then we have Harsha, which is probably something we'll decide in 1-2 quarters, right? Number one is if you can validate, that's how you see the segmentation in terms of how we see the growth pillars. Is that a right way to look at the business?
Can you be a little clear, Mr. Devesh, because we are not able to. Can you just exactly let us know what is the question? Till Harsha we were able to understand, but subsequently the exact question we are not able to,
Yeah. Let me repeat. Let me try to rephrase. So what I'm trying to understand is that lead has been our legacy and traditional and core business, which is 90% as of now, right?
Yes.
Now that you sort of called out, it would grow as a 10% volume and depending on the rates realization, but margin should be as a baseline of what we got in Q3, Q4, right? That would be a base assumption for lead going forward. Number one, is that correct?
So Devesh, your voice wasn't too audible, but let us try to answer the question and see if it's correctly answered. So we definitely have 4 numbers in terms of the portfolio that we have created, and lead is our traditional portfolio. Lead and copper was there for the last so many years. Now coming to aluminium and plastics, what we've done is we've set up the base, the foundations have been laid. We've kind of invested in the machinery, lot of, I would say, investment in terms of time and money has gone into it. Now, it will definitely take a couple of months to kind of become stable, and then fully operational, to kind of fully utilize the capacities, to also kind of... So we've entered the market. Now, when it comes to penetration of the market, we'll see that happening only in the next couple of quarters. So like the budget is announced in Feb, it takes 6 months to kind of, see the repercussions or the effects of it. So likewise, we'll also see and feel the positive impact of adding portfolio like aluminum, plastics and copper to the traditional lead portfolio in the coming quarters. Does that answer your question, Devesh?
Yes, it does. Directionally, I wanted to get the sense. The second part of my question would be that the identity that our business right now is 90% lead and 10% all others put together, and roughly 6% EBITDA. So not quarters, but let's say if you look out 2 years down the line, how do you see this overall mix changing in terms of revenue mix as well as the margin profile, let's say 2 years down the line?
Yeah, since it is being the first year of operation for these new products like aluminum, plastics and copper, this contribution is 10%. Over the period, this proportion will increase. For the next year, we are planning 30-70. But over to the extent turnover, overall turnover also will go. That doesn't mean the lead contribution will come down. Lead contribution will retain. Apart from that, we increase the turnover of aluminum, plastics and copper. Then by the time turnover also will go to 2,000 crores, something like that. So slowly the percentage will go to 30%. From 10 to 30% in the next financial year.
Next 2 years.
Great. Thank you. That helps. And wish you all the best. Yeah.
Thank you.
Thank you, Mr. Devesh, for your question. Once again, ladies and gentlemen, we are almost closing. If you have any questions, either use the chat functionality and ask me directly, or you please use the raise hand functionality. We have just one follow-up question from Gokul Maheshwari via chat. What is the expected tax rate for FY24 and FY25?
Same 25% tax rate that continue to be.
All right. Thank you, KK sir. Ladies and gentlemen, I believe that's all the time we have for today, as there are no follow-up questions. If you do have any follow-up questions, please send in your additional questions by email to us, and we'll follow up to get those answered by the POCL management. Once again, thank you all for joining us for the Pondy Oxides and Chemicals Limited Q4 FY 2023 earnings call. As a reminder, today's call was recorded by AlphaStreet. A replay of the call will be available on alphastreet.com and our India-specific YouTube channel. A final transcript will be available shortly on alphastreet.com for our professional investors. We'll also be making the transcript available at alphastreet.com/India for everyone afterwards. Thank you, everyone, and all disconnect at this point.
Thank you, everyone.
Thank you, everyone. Thank you, Radhakrishnan.
Thank you, Mr. Radhakrishnan.